Hi, and I welcome you all to today's Facebook Live. The theme for today's show is ASX listed fintech players under the spotlight in 2021. We will talk about three stocks that can be evaluated from investment standpoint in the fintech space, especially the buy now and pay later segment. We have Mr. Kunal Sawhney with us to discuss the burgeoning sector and the related stock prospects. Mr. Kunal is the founder and CEO of Kalkine Group. Kunal, under your leadership and equity market expertise, it is fascinating to see Kalkine spreading its wings across different geographies on twin model of media house and equity research business. Welcome, Kunal.
Thanks, Honey. Thank you very much for such a warm welcome. I look forward to today's Facebook Live and a very big hello to our viewers. Thank you all for joining us today. Please feel free to ask your questions, your queries that you have. I'm happy to answer them on the show or post the event if needed. You can also visit our media platform, which is kalkinemedia.com, and the research website, which is kalkine.com.au. Honey, over to you.
Thanks, Kunal. Thank you so much. Viewers, like I said, today we are going to discuss three stocks prospects in the fintech space, which can be evaluated while cherry picking stocks for a balanced and diversified portfolio. But before we start, I just want to put a disclaimer that any advice in this video is general in nature and does not take into consideration your personal objectives, financial situation, or needs. For the last 5 years, fintech space is gaining a lot of attention across proptech, insurtech, medtech, and other related spaces. The sector's footing grew even stronger during the pandemic, with BNPL playing an interesting role amid soaring prospects of cashless payments, digital transformation, and e commerce. Kunal, I would request you to take our viewers through three stocks in this sector which offers value to the consumers via technology in their offerings. Three fintech stocks primarily in the BNPL segment, which you would want viewers to have a look at in 2021.
Thanks, Honey. You have asked the right question. You have touched the right chord. The market scenario is uncertain given the tug of war between Biden's hefty stimulus aid and economy recovery hopes on one hand, and Trump's impeachment-induced political turmoil and global virus concerns on the other hand. Fintech is definitely an interesting defensive space to watch out for while looking at thematic trends to safeguard against potential market downside. Fintech space, particularly BNPL players, gained massive popularity amid the pandemic induced income crunch and the associated need for cashless transactions. Be it for a new investor or a traditional investor, it could be interesting to explore the growing sector.
Kunal, before we start with this interesting conversation on the fintech stocks, I would like you to touch upon the latest performance of broader technology sector and fintech space on ASX.
Yes, Honey. Let's talk about market in general. On Monday, ASX 200 slipped lower from a 10-month high. Tuesday saw some recovery in the market scenario. However, few ASX listed technology players were in red on both the days. Afterpay, Zero, WiseTech were in dumps with wider tech market underperforming. On Wednesday, we can see shaky ASX 200 with IT sector trading in red. Besides that, Altium and Afterpay slipped lower, despite the fact that Wall Street was up in the last trading session, fueled by stimulus-driven recovery hopes. On a broader perspective, we need not forget that these are daily moves in 2020. Tech shares have delivered outsized gains, and 2021 is also likely to be a good year for the tech space. So I just want to say that the tech stocks have done really well in the US, in Australia. So there are a lot of opportunities there.
All right. So, and just to clarify it in a broader way, and would you like to tell us which fintech stock in the BNPL space you think can be kept under investors' watch list in 2021?
Sezzle Inc., listed on ASX as SZL, is a prominent technology-driven payments company. Strong operational footing. Sezzle can be evaluated this year from fundamentals and technical perspective. The company provides a payment platform that provides platform to make payments between consumers and retailers. Since Feb 2020, Sezzle has added 1 million new customers. By the end of last year, its total active customer base crossed 2 million. In the month of November, the company reported the highest monthly underlying merchant sales of 113 million since the company began its operation in 2016. It is a whopping 188% growth compared to the same period last year. The company announced strong momentum in business for the fourth quarter of financial year 20. Each month, Sezzle has achieved new records for underlying merchant sales, active customers, active merchants, and repeat usage of business offerings. The installment payment system that Sezzle offers appear to be a big trend in the future, while the company is already seeing a steady growth in customer numbers. In fact, the company anticipates that in 10 years in the US, installment prices will be on the shelf as customers even shop in stores.
That's really interesting, Kunal. What would you like to say about its share performance? While you indicated that it's a stock that can be closely watched in near term, what is the price chart hinting at?
In the last 1 year, Sezzle has done a growth of around 250%. The last year's rally surged past $11. The stock couldn't sustain that and came down to Aussie dollar 6. However, the shares are witnessing decent buying around this level, which has kept the stock to fall further. From mid-September, the stock is almost trading sideways, which is normal after a huge run. Measuring from the high of around 11.8, it is down by almost 45%, giving it a decent upside potential.
All right. So, you know what, Kunal, our Facebook Live is gaining popularity day by day. Let us see if there are any questions or not. So I don't find any questions, but Kunal, there is someone who is saying, "Great to see you, Kunal." Huge fan following, I must say, Kunal. So let
Thank
us
you.
now move.
Honestly.
Yeah, we have Georgia. She's saying, "Great to see you, Kunal." Thanks, Georgia. And if you have any queries, please post in right there. We will get back to you right away. So, let us now move forward to the next question, Kunal. We discussed one BNPL stock investors can explore in 2021, that is Sizzle. Now, we would like you to touch upon a fintech stock that can see some correction.
Honey, this is a tricky one, but I would say APT, Afterpay Limited. The share performance has been interesting last year, up by 13 times since the March dip. However, I would say investors need to be cautious as the stock appears to be in overbought zone. Last week, the company announced that over 1.4 million ordinary shares in the company, subject to a voluntary escrow arrangement, will be released from escrow on 18th of Jan, which is pretty close now. After the announcement, Afterpay share price traded higher 5%. However, on many occasions, we have seen a considerable dip in APT share price, dragging down the tech sector and overall ASX 200. So the BNPL company stock was definitely an outperformer in the fintech segment in 2020. The operational performance, market expansion, and acquisition plans reflect success story of the BNPL player. However, it is important to evaluate if it's too late to add the stock to one's kitty. Afterpay reported growth in sales because of the rise in online shopping last year. In November 2020, the company announced global sales of over $2 billion. It also doubled the underlying sales from the same period in 2019. In 2020, Afterpay announced expanding its footprints in mainland Europe and Canada. Soon it plans to start operations in Asia. No doubt, Afterpay partnering with Westpac Banking Corp to launch new products helped the company gain momentum towards growth. This year, in 2021, Afterpay plans to acquire its European viral Pegantus. Having said that, Afterpay share price looks overpriced. There are some technical indicators which suggest that the share price is overpriced. While it was recently added to ASX 20, whether Afterpay is able to justify the valuation by uptick in cash flow is yet to be seen. For Australia, Afterpay is now a household name with its extensive branding across offline and online retail space. While many positive things appear to be on the operational front, it is no longer the only big fish in the ocean.
All right, Kunal, you know what? Georgia is continuously watching our Facebook Live. She has a question, though you have talked about it right away, but she wanted to know which is better, Sizzle or Afterpay?
Afterpay looks overpriced. Sezzle has the upside potential, as we can see.
All right. Thanks, Kunal. Thank you for such brilliant insights. Can you shed some light on price chart of Afterpay, as Georgia is also keen to know? Any piece of advice while we are suggesting investors to be cautious of some correction?
With regards to Afterpay, it has done amazingly well, return of 10x since the March 2020 low. That's not even a complete year, given such a gigantic rally in a short span of time. Some market players may look at profit booking. Talking from a technical perspective, momentum indicator RSI is giving a highly overbought reading on the weekly charts.
Great. Thank you, Kunal. Before we go ahead to the final segment of this show, touching upon an attractive BNPL stock that investors could explore in 2021, let's see if we have any questions. So we have already answered Georgia queries. I don't find any questions, so let's move ahead. So,
Yep.
let me straight away move to the last bit of this session. Our viewers are eagerly waiting for you to tell them which potential stock they could look at in 2021 from investment standpoint.
Honey, Lay-By Holdings Limited, listed on the ASX as LBY, can be attractive stock pick in the fintech space. It is a provider of buy now, pay later services that are offered to customers across New Zealand, Australia, and the United Kingdom. Gary Roloff, his wife Robin, and two sons, James and Alex, set up the Lay-By platform. They identified a market opportunity after understanding that the traditional lay-by payment method was not customer friendly. The company got listed on the ASX in September 2020. In the month of December, the company announced three major business milestones. To start with, Lay-By announced that its tap to pay facility that has been released in New Zealand at select retailers. It was first launched in Australia in mid-November. The company has collaborated with MasterCard to launch this initiative. Secondly, the company announced its initiation of beta testing in the US market. Lay-By plans to launch its services across the US in April 2021. The third achievement which company announced was the partnership with Prez. The BNPL provider will allow its customers to pay in 6 installments for gift cards in Australia and the UK. So Lay-By is a significant player in the buy now, pay later, BNPL in New Zealand. Because of its growing popularity amongst customers, Lay-By announced that it has experienced growth better than it expected in November. Against the forecast gross merchandise value of New Zealand dollars 61 million, the company reported a GMV, or a gross merchandise value, of 71 million in November, which is a 56% growth over the previous month. Also, its year-on-year GMV, the gross merchandise value growth, is massive, 220%. Lay-by also experienced growth in the number of new and active customers. Its merchant base has increased as well. Notably, Lay-by has witnessed substantial growth in all of its markets. However, the United Kingdom, UK, proved to be the best performing market for the company.
On that note, what about Layby's share performance, Kunal? Looking at price charts, why do you think investors should explore this stock to buy in 2021?
First of all, the stock has already seen through a decent selling pressure since its listing in September 2020. From the listing price of $2.10, it has been hammered all the way down to current market price of $1.29. Notably, a stock trading at relatively lower levels generally gives a very good risk to reward ratio. Another thing to notice is the volume activity of the stock. During the downtrend, the volume of trading has continually been decreasing, which is generally an early sign of a trend reversal. To put it simply, as the stock is moving down, a smaller number of sellers are willing to sell at these lower prices. Hence, there is a high probability that the trend might soon run out of fuel.
Okay, so Kunal, before we conclude today's Facebook Live, we have a question from Charlotte. She is interested to know, is lay-by better than Afterpay?
Well, Afterpay is a very mature company, Honey. They are very big. Lay-by has just started its journey. So there is a lot of growth that can be seen in Lay-by. Afterpay is obviously very, very mature. And as we have said previously, it's in the overbought side right now. So one just needs to be a bit careful with Afterpay.
Thank you so much, Kunal, for providing such valuable insights on fintech stock prospects and taking questions from the viewers. Now it's time to say goodbye, but before we sign off, please like, share, and comment on this video and stay connected with us on our Facebook page. We are also active on YouTube, Instagram, and Twitter, so do subscribe to our social media pages. Next week, we'll come up with another exciting topic for Facebook Live. And if you have any queries, get in touch with us on info@kalkinemedia.com and we will get back to you. You can also visit our media website, www.kalkinemedia.com.au, and equity research website, www.kalkine.com.au. Thank you so much, Kunal, for your time. It was lovely chatting up with you again. Thank you so much.
Thank you very much, Honey. Have a very good one. See you.